The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock until noon Eastern Time at 877-927-6648. Same number that you called for Steve's show just a little earlier, between 9 and 10 and 10 and 11. Steve Rhodes, great show, as always. Today's Monday, so Larry Pesavento comes on straight after me. Then you've got Daryl Martin, got Dave White, you got at 4 o'clock till 6 o'clock, you've got Tom O'Brien wrapping up the day, giving his astute analysis, and this is all-day programming. Fantastic. And, of course, they are archived. You can go to the archives. My archive number is Channel 11. Yep, Channel 11. I'm on at 11, so it's Channel 11. So let's look at this. The Dow's up 16 at 15,559. It made a peak D, and you know in the chap wave always look for peak D. Got to become a little cautious at peak D, which is what we're doing here. But in fact, we still have only in the stocks. We only have long positions, and that's very interesting because we've got a very nice mix. We've got a participatory stock that had great earnings on, very positive earnings on Friday? Was it Friday? No, Thursday. Yeah, Friday, and spiked up very nicely. You got another company that's also one of the oldest American major companies around, and that's doing very nicely here. Got a gold stock, which is really participating beautifully. So and we're looking at a situation where I've mixed the portfolio up into different sectors. Got a sector in the pharmacy drug area, doing very, very well. So I'm looking at this and I'm saying, gee, we're at a D. In the chap wave, the idea is to get to a D. But there are a bunch of technical indicators that I use. These are the things that I teach in my webinars in my Master Trader series. Just to kind of sum it up here, the Dow, this action from the way the MACD and the stochastic have come together should really have been a very powerful peak C and then a pullback as a stochastic pullback from peak C, and then the momentum of the fast-moving average of the MACD takes you to leg D. So from C, you go to leg D, but it's built on the momentum, and then there's a pullback. Well, this is so powerful that I must say I probably won't be surprised if we go above 50,589 for leg E. Will it recycle? I don't know. All I can say is this is powerful. And the weekly chart is in leg E/A, calling it E for now. There's no reason to call it anything else. And the monthly chart is going into that zone that I talk about, that inside track resistance. So, I got a couple of questions in the den, but let me just do this. The S&P, Monday, it's great to get a nice feeling for what we're looking at. Leg E has started in the week and the daily chart of the S&P, and it's very quick, C to D and then D to E. Can this be a recycle to the upside based on the stochastic at 96% and the MACD is still strong? I don't know. All I can say is that if you want to fight this, you better have a tight stop. And if I'm doing anything here, I'm making tight stops. And anything I'm thinking of shorting, because the weekly chart is F/A and the monthly chart is in leg D. Also, a quick C to D. But in 2 out of the 3 cases, that is the daily and the monthly, the charts are really strong. The price movement in the weekly of the Dow and the S&P is very powerful because it's at all-time highs. The technicals are only following. They're not leading. They're only following. But it is at 84%, which is good in the stochastic. But this is Monday, first hour and a half. We haven't even got 2 hours of trading in, so I really can't talk about that in terms of the end of day, let alone the end of week. So let's go on. This is fascinating because the Q's had, now where did it go? Oh, wrong place. The Q's had right there a gap down on Friday and doing okay right now, holding the 9-period exponential moving average. But I'm explaining to my subscribers on my opening call, that's my That's the vehicle that folks use to be able to go to see all my different charts, sending them from about 6:15, 6:30 in the morning. The Dow chart, this is what I show. I show the Dow chart right here with a big explanation and then another explanation below it. I show the 120-minute chart right there. I show the 120-minute, that's the 120-minute diamonds. This is a 120-minute Dow chart. Holding that, look at that up channel. I'm impressed holding it like that, but the day is young. I am expecting that we're going to go under that channel quite soon. But look at the VIX. The VIX couldn't even bounce. It got repelled at the down channel, the down trend line resistance. And it's at 12.82. That's buying pressure at that level. Look, the trend's saying nothing. It's at 0.80. That whole thing about neutral when it's between this and that, to me, that's just absolute. I don't use that. I cannot use that. I do use other parameters in the short-term trading index, which I consider to be really important. But just stuck in this area here, it's not telling me very much. Now, the Dow is under the peak D high. The S&P is just now broken to that leg E. As I said, this has to be a yellow. Let me just do that. So I've completed the chart pattern. Now that one's working nicely. I had a little problem before. All right. So that's that. Now, what we've got is the comp index is up 9 at 35.97. But this is the interesting thing. Gold. You know, I've been talking about gold and I'm saying in terms of what it's done, it's kind of pathetic. But in terms of it having turned around and not going to retest the lows, I was convinced that it should. There was no reason why it should do that, and it should make a leg D up, and it has to do it real soon. And I said, what you really want to see is a good, strong double-digit 18 plus or 22 plus or even higher gap up opening, and it actually should do that for about 2 days. Well, it hasn't done it for 2 days. Friday was okay day. It held the 9-period moving average, but look at this, up $34 at 13.26. Silver's up 89 cents at 20.35. Now I can deal with the question that then Zip said, is it too late to get into SLW? Well, you know, I'm going to make a suggestion here. It is leg D. But it is leg D and a single leg A up in the weekly chart. And I'm going to make the suggestion that says you know that you're buying it way off the $17.75 low. That's $5. That's about 28 to 29%, something like that, I think. To the upside. Can it pull back? Absolutely. Is it going to go higher? From everything I'm looking at here in the weekly chart and the monthly chart, I don't see any reason why it shouldn't go higher. It was absolutely important that it did what it did right now and spike. I don't care where it closes. It needs to get to this leg D with a gap and power higher. I don't think it's going to close below the low of the day, which of course is way down at 22.30. That's SLW. So I'm going to make a suggestion of just nibbling here. But the plan is to nibble here and have an entry point below 22.25, 22.75 right now. Almost the high of the day, the high of the last. You've gapped up above. This is now, is that a bar? No, that's not a bar. This is now an island reversal to the upside. And that's very, very important. It's a very big plus. So I'm going to suggest that you start a position right here, but it absolutely isn't your only position. This is a small position. The objective is that you might miss it because it's now it's a powerful move. Before it was just kind of okay. But now it's above the 9-period moving average. For the very first time since in the weekly chart, since the 8th of February of this year. So this is very important. That was way back. That was way back in the 35s. Starter position, but it's only a tiny starter position. You really want to have another 2 positions, and one is at somewhere just above the high of 21.78. That was a high of Friday, and then another one, just an abstract low that you put in, and you want to get it somewhere around between 20.80 and 20.60. So you have small position, another position that you want to add, and then an outlier which is way down. As I say, it's closer to 20.40. So that's the only way I would play it right now. But absolutely, I think you should have a position, but you've got to know that you're buying the top of a move that's taken a couple of weeks, quite a few weeks, 3 weeks, and it's a move that is a little bit vulnerable to some kind of pullback. So let me quickly finish these. We've got bonds up 8.30 seconds, got crude oil down at 65. You've got the dollar getting smacked. The dollar, if I can get this correct, is down. It's at 82.31. I've got it down 82.16. That's probably a little bit behind, so it's bounced a tad off that low, and it's headed to the 81.85 level. That's what I was discussing, I think, on Friday or Thursday. I said if it does break down, then the 200-period exponential moving average in the below 82 is really a target and should be good support. Otherwise, it's going to have a real problem. Let's go to Mike in Long Island. Hi, Mike. How are you?
Good, Basil.
Good.
Have you heard of Jardine Matheson? They're a conglomerate. They own a lot of Hong Kong properties and Chinese properties. Anyway, it's
no. I knew that there was a Jardine, but did they amalgamate or something? I don't know if it doesn't matter.
One of these family-owned conglomerates that is back 100.
And it's trading at 58.7100. So this trades a little differently to here. So not a pink sheet, but it's got those decimal points. And it's trading right now. It's made an H pattern in the weekly chart. So their major focus is on Chinese properties?
Yeah, Hong Kong properties, Chinese properties, transportation. It's
so they're one of those conglomerates.
Hathaway and
yeah, they're in everything then. Okay, all right. So the question is, if you were holding this, would you lighten up? Okay, that's going to be a very easy question if I give you a very quick answer. I don't really want to, and I'm going to explain exactly what I'm looking at here, because there are a number of chart patterns that say that it's trading at 58.71. If for any chance the 56.88 level of the 26th of June holds, then there's another kind of chart pattern that says there could be a rally. At first it must be called the counterpoint rally, because if it breaks underneath, you see the candle that I'm looking at here is the candle of the 28th of June in the weekly chart. That's what I call, that is a positive Chapman wave Roman candle. The negative one is when it's red, but the positive one can have the same implications as a red candle. In this case, the coloration I've got is green and red. So the implication is that if at any point it breaks into the 57.70 area, and it's at 58.70, so it's down, it'll only be about 1.5 to maybe 2 points. There's a really good chance it's going to retest the low of 56.88. And that 56.88 is going to be the left side of both the daily and the weekly charts. If it takes it out and closes under it, the chances of it having the pattern that I call the H that becomes a cup formation, a very positive cup formation, that's totally negated. Oh, I shouldn't say totally, but it has a much less chance of succeeding. So give me a moment. We've got a break coming up. Let me do a little work on this, and then I can tell you what I'm thinking. And also, since you're in a position, it's much easier for me to say these are the parameters to watch. So we'll be back with Mike in Long Island. We're looking at Jardine Matheson Holdings. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Editions Hour. I'm just finishing up this chart on JMHLY. Jardine Matheson Holdings. I've heard of the Jardine part. I don't know this company at all. So I'm looking at it, and I'm looking at it fresh, and they obviously, as Mike said, they are like the Berkshire Hathaway of, and they're in Hong Kong. So I'm looking at this and I'm saying, okay, the monthly chart, I'm working backwards now. The monthly chart has made a peak E. The D and the E are where you've got to be careful in this chart, in the monthly chart. And the stochastic and MACD are turning down. Both of them were way lower this time when it went to the new high than the last peak D back in 2011 in July. Went to 59.25, pulled back under the 9-period moving average, that black line, and then it goes up to a peak E, and now it's pulled back, and you've got, well, let me see, there are, yeah, the month's not finished, but so far it looks like this month will likely see the MACD at least test, but probably close underneath the fast-moving average, and stochastic's now down at 75%, but it's a monthly chart we've seen on the last day of the month where charts have gone from really ugly to really positive. So all I can say is right now, I would say it's a negative chart, but you've still got the rest of the month of July to go. And the 9-period moving average is 61.18 at 2 3/4 points, 2.5 points. Easy to do if it's going to be successful in having a bounce. Now the weekly chart has the very pattern that I'm looking at. Comes straight down, about to make the kind of pattern that I look at, the lowercase h. And that lowercase h says you've still got a way to go, but the level that we spoke of, I think it was 58.60, no, 56.88, right? 56.88. 5688. That's the number to look for. So here's my recommendation, and there's that candle again. That's the what I call the positive Chapman Wave Roman candle, but it's only positive if it starts to close above that wick high, in this case 60.43 for 2 out of 3 bars, and you really want it to be preferably 1 bar, then 1 lower, and then the next bar sharply higher. That's the confirmation of this pattern that goes from an H into a beautiful V shape or a cup formation. But the weekly chart today says, so the daily chart with today's action says, what a pity, it's just gapped down like this, even though it's at the high of the day. Okay, I think I've looked at it, and my assessment is this. The weakness that is in both the chart pattern through the Chapman Wave lettering, the weakness that I'm looking at in all time frames based on the patterns that have unfolded and the lack of success in breaking above the left side arch peak high of 61.68 tells me that you've got to be somewhat careful here. Now, I'm not going to tell you to get out of the entire position, although there is the look about this that says you got to be real careful, because that's a possibility. Rather, I'm going to say on some part of your position, since you've held this far off the top, and the top was at 60, I forgot to see what the top was, 68, right? 68.99, almost 70. It's down at 58, so that's 12 points. You've held it for the 12 points down so far. I don't think another 1.5 in the long-term aspect is going to be a problem. I don't want you to actually get out of this position based on a pattern that hasn't yet unfolded but could unfold. What I will say to you is this. If it closes underneath 56.88 is the low. If it closes under 56.50, that's only... it's 2 points away, but since obviously this is a longer-term position, I think it's reasonable to say, give it those 2 points. I'm going to say to you, you must lighten up, and I'm not sure yet whether I even tell you to use that position to put back on. The core position it's already tested once, the 57.35 low of November of 2012. There isn't that much support in the weekly chart until you get to the doji candle with a low of 53.25. That's the reason why I would like you to lighten up. Now, what I would say to you is this. If it keeps going sideways, the next rally attempt that can go over 60 above 60, if it goes over 60... Yeah, if it goes over 60, I would suggest taking one small part of that and having a tight stop, a trading stop that you move up, and if you're taken out, fine. Why? Because any move from here that has any gusto, any momentum to the upside, 61.35 is the 9-period exponential moving average that it has to close above. And if you have a trading stop, because the MACD is still good, but the stochastic is really not very good at 26% in the daily. But if the momentum of the price is good, then all you need to do is have your trading stop, and look what you've done. You've saved yourself from getting out early. At some point you will get stopped out with a trading stop, but at least you're getting stopped out higher and higher, because then you've got your core position. If that core position then goes to 62.30, that's really nice action. That's what you want to see. So those are the parameters to watch. Any close underneath 56.50, 56.60, and I'm out for some part of my position. I hope that helps you, Mike.
Hey, thanks a lot, Basil.
Thank you. And I'm going to have a deeper look at this because I've never looked at it.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Looking at the home building stocks, Lennar, it's come way off its high of 44.40 back in May, was that? May the 24th, 44.40. Recently it was down to 33. Wow, 11 points. That's 20-something% decline. So we're looking at the 9-period exponential moving average. We're looking at the H that goes to an M pattern and making lower lows. I just think that they need time. They had a spectacular move. They need a little more time. Toll Brothers, let's look at that. Well, Lennar's down 58 cents to 34.95. Not a big deal, but compared to where it's been, Toll's acting a little bit better. Also the H. Now that's the pattern that I was looking at just a moment ago in the JMHLY. If in fact it's a successful H pattern and breaks above the left side arch, then it can go quite a bit higher. That's the reason why I said I didn't want to get out of the position. I didn't want Mike to get out of the position if he's in it, because it's a longer term holding. Because there is the chance, yes, it could break. Everything about it says it's probably going to break that left side low bar. But if it's successful, that becomes a very powerful pattern if it takes out the arch high. That's exactly what happened here, because Toll Brothers made a high of 33.51, retested successfully, and then went all the way to 35.26. That's 2 points. That's a nice breakout to the upside. Not the very, very strong one that goes all the way back to the previous highs, but still, it's successful. So when you look at the HGX, that's the Philadelphia Housing Sector Index, HGX, there it is. Excuse me. That has to be the longest coughing period that I've ever had. It's just taking forever to go away. But anyway, so the HEX made it high back in May the same week of 24th of May at 210.01. That's the Philadelphia Housing Sector Index, and pulled back really sharply to the 168 area on the 28th of June. That was just, wow, in 1 month. Boom, 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 boom. And then it bounced and stuck at that 9-period exponential moving average. The monthly chart shows, yeah, this is a fantastic move, a nice, a very good counter-trend rally. Have to call it counter-trend for now, because the major high was 293.66 back in 2005. I remember that period so well. Then it came down to 54.31. That is some haircut. 54.31 on the week of March of 2009. In March of 2009. However, 54.31 to 210.01, I would consider that 210.01, that's a heck of a rally. That's like the Dow back in 1932 coming off the bottom at 40 and going to a five-fold increase into 1937, 1938. Well, look at this. In the 4 years, 1, 2, 3, 4, 5 years, 4.5 years, it's gone 200%, 400%. Hey, I would say that that's a pretty darn good rally. So timeout is fine. Just, breather. Still think that there's room to go on looking out on the home builders. Now, here's the thing that counts. Look at the EUR-USD. That is the currency pair. It squeaked to a new high. Now, that's that rectangle formation that I discussed about a couple of weeks ago. I said that within it you could get a Chapman wave A to B to C to D. And we've gotten that. In fact, we've got two of them. One had a very big quick burst to the upside. And then what happened is it pulled back and it went A, B, C. Then another A, B, C, D, E. And now it's an E. And that says getting a little overboard. Got to be a little bit careful here. That is the Euro-USD currency pair. MACD's pulling back. Stochastic's still good in the 100 in... Stochastic is pulling back. MACD is still good in the 120-minute chart. The daily is still saying, hey, I've got tremendous strength. I'm at 84%. I'm doing very nicely. Thank you very much. Weekly chart is making a potential soft W formation. Now look at the dollar, DXY. Dollar trading right now at 82.26. Hey, 82.26. Well, look what's happened. It's pulling back the 9-period moving average that was just beautiful support. The MACD fast-moving average. Let me open this up so that some of you can read this a little bit better using the Chapman wave methodology. Look at that. 9-period moving average, and it soars to the upside. Did it care about volume or anything else? No, it just went peak A, B, C, D. Got to D. That's the requisite in the Chapman wave methodology. That's when you've got to be careful. Pulls back 84.75, and now the 9-period moving average is resistance. Do you need anything else than that? Look, MACD's expanding, stochastic's only at 13%. Says, hey, we're getting near the 81.85 level, which is the 200-period exponential moving average support. Then it might have a bounce. 82.80 will be the strong resistance. Aha! What about the USD-JPY? USD-JPY right now has gone to a peak D. Is pull back, the pattern that we were just looking at in Jardine as the same thing here. You got an A to B, you got a little A over there, and that's the pattern you got to be careful of. If that turns into an H, and that lowercase h, this is the H pattern right here, look like that, and you always get the back coming down. It's like a chair, and it could be sloping sharply or it could be straight, but it comes down like that. If that left side low bar there, I'm just typing this. Let me see. You can see it. Yeah, you can see it very nicely on the charts. If that gets taken out, then, in this case, it would be 98.234. Then the next level of support are those little doji candles. They're back into the 97s. 97.229 is the support there. So we've got to watch that really closely. Now, let's go back to the gold chart. You remember we've been talking about how pathetic those little bounces were, but everything was positive. But just in relation to where it's been, I have to say that it was pathetic. And it was pathetic. Is that all you could do? And my contention was that until we saw gold actually one morning just gap to the upside, not giving anybody a chance who's not in to get in, that's the kind of action you want to see, and you probably would like to see it a second day as well, maybe even tomorrow if the dollar pulls back. But this now is very important. It's stretched a bit to the right. But which chart did I do it on? I don't think I did it on this one. If I take my left side, right side, visual cue, what I'm looking at is because of the time taken. Remember I said there's a fighting. We've got a pattern here. It's the two fighting patterns. It's the up channel. Why is that now so? Oh, I just upgraded. Upgrading. I hate upgrading. You never know what you're going to lose. I know exactly what I've lost here. Let's see if I'm going to get it back. New parallel. Let's just do this right there. There it is. Okay. So the new there you are. So the real challenge is, how is the GLD trading at 128.59, up 3.48? That is a huge move. How is it going to handle the two fighting patterns? One was the arch formation, which has now changed. So that was the question. So it's broken out. So the next thing is this. I'm going to make it bigger because I don't like to have messy charts. So let me do this. Make that green, because a break to the upside in the GLD above, certainly, man, that's low, of 130.38. You remember the day it gapped down back on the 19th of June, and then the following day was the 20th, and it gapped down? Well, that low, we're above. No, we're not even close to that low. That low of 130.38, the high today is 128.77. That comes in. At the same time, it corresponds to what? That's tomorrow. Tomorrow's 131.44. That's the green line. If I do this now, look, this is called the Chapman Wave Inside Track. In my CD introducing the Chapman, I just got rid of it. In my CD introducing the Chapman Wave methodology, that is very important. That technique. Why? Let me just do this if you don't mind. I just need to make it a little thicker. I'll make it gray. I'm going to make it a little thicker, and then I need to consider it. That's it. So now I'm going to call that as a default format. Set as default. Great. Now I'm going to take that line and do another line, and that new line is going to be red. As I said, I don't like to make it too messy, but I want to show what's happening. This is the Chapman Wave Inside Track. This is why I wanted to be in the golds in one way or the other. And this is the reason. Because as you're moving up over each one of these moving average, look, this one here is the 20. This is the, it's the 32. I'm still keeping on the 32. Okay, 32 period moving average. Next one is the 50, I'm pretty sure. That's a 50. Each one of those is very important. So now it's getting so close to the 50, and the 50 is technically at 129, and we're at 128.52. But it also turns out that if the GLD spikes above this green line, then the repellent zone has become a propellant zone. And that is so important. That's the reason why I said that zip in the den, yeah, start your SLW. It's only a starter position because you've lost a lot from the move up in terms of risk reward. So here we are. The SLV, which is the iShares Silver Trust, is right now in leg D up. A gap up to leg D. So far, that's a good sign. I wonder if that's going to work. Here, try it again. There it is. Peak D, a leg D. No peak yet. Try that again. Yep, there it is. The MACD is good. The stochastic's only at 62%. And the reason being is there was such a horrendous long-term down move in the monthly and the weekly that even the daily is having a lot of trouble believing this rally. So I do like it. I think silver is going to go higher. The task at hand, of course, is to try to get to the 20.53 low of the 19th of June. It's trading at 19.81. This is the SLV, the iShares Silver Trust. Needed to do that. Needed to do high-grade copper. HGU, I'm going to U for now. There it is. High-grade copper is moving up. That's a very nice move in copper. It's in leg E up. It could be brand new. Leg A, I'm calling it E for now. There's no need to actually even change it until I get confirmation. That's leg B up in the weekly. Very good. A, if I can do that, A, B. I just need to double check, and then we go to our next caller. 2010, yep, that's it. Leg B up in copper. Hey, the monthly chart and the weekly chart look terrible, but it's the first time in a while that it's trying to move so quickly early in the week above the 9-period exponential moving average. That is important. Let's go to our next caller. We've got Mark in Denver. Hi, Mark. How are you?
Good. How are you?
I'm well, thank you.
So I played our little gold play.
Good.
And I got in at $1.17, and I just went ahead and got out at $1.38. Took my profits, and I'm looking to maybe. Did you
get completely out of it?
Yes.
Okay. All right. It might be a little difficult to get back in. That was the only reason why. But a huge profit like that in such a short time, grab it. I think this is a mark from now on into the rest of July. My guess is that when there are really successful gains, take them. You're going to get another chance.
That's what I was thinking. So now I'm looking. I know we're kind of peeking at the short side, and I'm wondering which ETF, the IWM, the Qs, the diamonds, or the SPYs, you think are the most vulnerable. I'm going to put a September put position on.
Okay. The way I'm looking at it right now, I needed to see three things happen today. I needed to see the IWM, which is the iShares Russell 2000 ETF, move above 104.59 to start leg D. It's done that. Right. If you look at it, you haven't even, as of now, since it's so hard to believe these things. When you look back, it always looks so easy, doesn't it?
Yep.
When it broke above the 9-period moving average on the 27th of June, the IWM said that 9-period moving average, this black line, this green line, the fast moving average in the MACD, and the stochastic above 80%, it's all I want, because I'm not even thinking of going back to the 9-period moving average. Now that it's in leg D, if you look very close, you'll see that the histogram, those thin green lines there, and let me just look at the chart to see. It's blending in a little bit. These are volume, the gray is volume, but the green, I think in the den you could probably see it a little better. Let me open it up. I don't want to change the characteristics. I spent a lot of time trying to get it just right on this white background chart. But let me point. You see that high in the histogram. It's the histogram is the differential between the red line, the 26 period, and the 12-period moving average that's turned into a 9-period moving average, exponential moving average differential right there. And as that green line gets closer to the red or further away, so the vertical lines will expand or contract, and they're starting to contract. So there's just the hint right now that it's a little bit toppy in terms of one of the key ingredients starting to turn down. But the price and the MACD and the stochastic themselves and even the on-balance volume are saying, hey, there's three of us against this one tiny little thing, and we are winning right now. And that's all I can say is that the weight of evidence, E, maybe it's F, it could have recycled, EF. Okay, so that's the IWM. I'm going to make the suggestion here that the Qs, the QQQ Trust, there's an alternate. One of my subscribers sent me an email on Thursday. I didn't get it until Friday. I think I might have seen it late Thursday night, but Friday I already started looking at it. And it was on my mind all the time. Is there a chance that the QQQ Trust series, because of the high, the doji that was made at 75.74, and it was times 2. It was done 2 consecutive days, Thursday and Friday. Wednesday and Thursday of last week. I'll talk about that, and we'll see which one has the potential to pull back the quickest and the deepest. We'll be right back. Great question from Mark in Denver. Which one of the indices is going to be the most vulnerable if there's a pullback?
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're on with Mark in Denver. So Mark, this is really what I'm looking at here. The Qs, if in fact there's what I call that double stochastic arch formation, that M formation that fails very quickly, then the Qs look to me like they could be vulnerable. Whether they're the most vulnerable or not, I'm not sure. You've got the NYA, which is the New York Stock Exchange, at new recovery highs, not all-time highs, but new recovery highs. And I have 2,000 stocks. I'm kind of impressed with that. I don't see a single sign yet. The MACD is great. The stochastic's great. If you're looking at the Dow INDU, that's starting to show weakness because of a couple of stocks. But the MACD is holding really steady. The stochastic at 94%. MACD is just starting to see the histogram slowly, one by one, the candles are pulling back, but they're still very strong above the 0% line. The MACD has shown no signs yet of actually reversing sharply down. I suspect it's just going to be one by one. You're starting to see, like McDonald's, you're starting to see a couple of stocks start to weaken, and that's a hint. So here's my suggestion. I'm not sure one even wants to get too carried away on the short side, but this is one of those markets where, just like with the golds, you need to have been prepared beforehand, because when it starts to move, it moves really quickly. So if the market's going to be pulling back, my suspicion, just based on what I'm looking at right now, is that the Dow is probably one of the weaker links, just because of a couple of stocks. And because it's one of the weaker links, it might turn out that it drags the others lower. It pulls back, but I'm not going to say until it breaks, until the Dow closes decisively underneath 15,450 to 15,375, that I've got anything other than just like a near-term signal that says start some kind of a plan if you want to be cautious, and if you've got longs and you want to protect your longs that are based on Dow or Dow-type stocks. But it's really just a starter position. So if I saw that the stochastic in all the cases was at 84% instead of here at 94%, I would have had no compulsion but to say, hey, the area of least strength is to move decisively up from here and hold. The area that has the greatest potential is just time and possibly price on the downside. But right now what I think I'm looking at is I'm looking at fairly limited upside, but also security that there isn't that much yet on the downside. The day's young, 2 hours into the day, 2.5 hours, that's not, for the beginning of the week, nice action, but I don't want to base anything on 2 hours worth of work. But you know what my position is thus far?
Right.
All I can say is you've got to be watching real closely, and you can make it as simple as do this. Just look at the VIX index. The VIX is at 12.83. If the VIX breaks into 13.75 to 14.26 in the next 2 sessions, this market starts to pull back. And if it holds in the 14s and goes to 15, that'll be weak almost all the way into Friday. If it holds in this area of 12.83 or lower, that's still buying pressure. To me, that's an easy way to do it. Most importantly, what I'm looking at is individual stocks, because now I'm beginning to see signs of certain stocks that are weakening, and I'm also looking at certain stocks that are holding really well, and I'm not going to yet call them counter trend, but they are counter to what they've been doing for a long time and have been moving up quite nicely, and we just happen to have some. But at the same time, that makes it very special. So stock selection, index selection, and at this particular point, I have to call the Dow one of the weaker indexes. That's the one I would focus on. But I don't have any big signals at this particular point. I suspect by the end of the week I will have a better signal. Hope that helps you, Mark. Good question.
Thank you.
Thank you very much. So Basil Chapman, stay tuned for Larry Pesavento. It should be a wonderful show as always. I'll be back tomorrow. Thanks for being in my opening.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.